Hello, everyone. Good day, and welcome to today's webinar titled Retirement Ready, Expert Insights for a Secure Future. Thank you for those of us who have joined us so far, and we're so glad to have you here. My name is Rebecca Adenuga, a wealth advisor with United Capital Wealth Management. Unfortunately, Onye Osowoke, who was supposed to moderate this session, is unable to join us today because she's currently under the weather. So I'll be moderating in her stead. So just before we begin, I'm just going to give, a little chance for more persons to join us. We would love to have, a good number of people who could benefit from this session. So before we start, I'd just like to run us through who we are at United Capital Wealth Management and what we do. United Capital Wealth Management we focus on providing bespoke global wealth advisory and investment management services for high net worth individuals, their families, and institutions. We do this by effectively assessing persons' financial history, helping them to achieve their financial goals and their objectives, preparing you for an adequate pre- and post-retirement lifestyle. Now, today, I think we have a good number of people joining in more. Thank you all very much for joining. Welcome once again. For those who are just joining, my name is Rebecca Adenuga. I'm a wealth advisor with United Capital Wealth Management. Now, today we have a very engaging and informative session lined up for you. We'll be covering, topics related to retirement planning, which includes psychology of retirement, financial planning, estate planning, and many more. We also have very seasoned speakers on the call for you as well. Before we begin the session, deeply, I'll just take you through a few guidelines to help us, guide ourselves throughout the session. First, please note that this session is in listen-only mode. Hence, if you have any questions, we will be having a Q&A segment later in the session where our speakers can address them. For our Zoom audience, please submit your questions via the Q&A section or the chat box located at the bottom of the screen. For those joining via YouTube, please use the comment section. And please note that this session is also being recorded. If you would like to have a recap, the recording will be made available after the webinar. Now, I'm going to be introducing our esteemed speakers for today. We're so honored to have Inyang Samiorumbe, who is known as the Retirement Planning Queen. Inyang is the founder of Bloombox Platform, an organization dedicated to providing retirement planning services. With over 35 years of experience, she has helped countless individuals secure their financial futures and plan effectively for retirement. Welcome, Inyang.
Thank you very much, Rebecca. Good morning, everyone. You're welcome.
Thank you. We also have another expert on our panel today, our very own Michael Abiodun Thomas, who is the MD CEO of United Capital Trustees, Nigeria's leading trusteeship company. He'll be taking us through the concept of estate planning as it relates to retirement planning. Hello, Michael.
Hi, good morning, Rebecca, and thank you for having me. Good morning, everyone.
Thank you. Last, but definitely not least, our very own Adetola Fasi, who is the head of wealth management at United Capital. She is a seasoned financial professional and wealth advisory expert. She'll be discussing financial planning as it relates to retirement planning. Hello, Adetola.
Thank you, Rebecca. Hello, everyone. Nice to have you here.
Right. Thank you. So now that introductions are done, let's get into what we promised to be a very insightful and exciting session today. I will be starting with Inyang. As the retirement planning queen, I'm sure she knows how retirement is very significant, for life transition, and individuals often react to it in various ways. As an expert in retirement planning, could you, explain to us the psychology of retirement? Why do people react, the way they do when it comes to retirement? And what are some common psychological responses that you have observed during your time as an expert?
Thank you, Rebecca. Thanks for the warm introduction again. As a person nears retirement, much of the conversation is frequently centered on financial preparedness. So what we find is often the last minute thought here and rarely discussed side is the psychological and emotional side of this huge transition in your life. So beyond the safety that your nest egg provides, your emotional readiness is essential to making this huge transition and also thriving while you're at it. So in retirement, people would often experience a mix of emotions when contemplating how they're going to navigate life, from excitement initially, because when you first retire, the excitement that, oh, relief, I'm done with this humdrum life and all that. We usually call that the sugar rush period. That's the period, you want to go on a boat cruise, you want to do this, you want to do that. But it can easily transition into boredom when you are now done with the initial boat cruise type of stuff and all that, and then you're now back, to your reality, so to speak. So boredom could set in, and sometimes it can then go on to anxiety, and God forbid, sometimes depression. These reactions are typically rooted in the loss of people's work identity. Many of us are defined by our work, what we do. Because if you ask people to introduce themselves, the first thing that they will say, oh, my name is Mrs. Nyansami Orugbe. I'm the MD, CEO of this and that. Okay, now you are not anymore, because what I always say is that who are you without that brand call card announcing you? Because when you come into retirement, you could easily go from a who is who to a who are you, right? So now you have concerns about financial stability and adjustments to your daily routine, right? So it's crucial to acknowledge that these feelings can be normal, so to speak. But if you have planned, then you should be able to envisage them. And the idea of planning is to ensure that you're able to handle these emotions. Understanding these emotional and psychological adjustments can significantly influence one's retirement experience, which is why we keep calling for planning. Because without emotional preparedness, a break in work routine would normally take its toll on the mind. Who am I now? People don't know their purpose, and your phone goes very silent, you may know. And statistics show that our contacts, right, are usually made up of about 70% work related. So when we retire, it then means that how we have lost 70% of our contacts. So it's important to have this at the back of our minds. And what retirement planning then does, as much as you're trying to put aside the finances, you should also, in recognition of all these things, be able to start putting things in place to forestall any of this happening to you. Thank you.
Thank you very much, Ian, for that insightful answer. I mean, that has really helped us address certain things and understand a lot. I mean, what I really picked out was on the transition from the whole who are you and who is you now. I mean, most people don't really think about that at retirement. Boredom could come in, even when you think you're enjoying the best of your time. Now, I'm just going to, I mean, you've spoken on this and want to really understand what are some key psychological preparations people should consider when planning for retirement?
That's an excellent question, Rebecca. Thank you. Okay, so key psychological preparations, this should include first visualizing your ideal retirement lifestyle. I would normally say paint your picture. And my retirement picture would definitely be different from yours. So I need to know what is the lifestyle that I'm envisaging in my retirement. And also you have to adjust your perspective to enable you even retire to and not retire from. Because a lot of times in retirement, the conversation is always about, I retired from. I mean, which means that we're still holding on to our career persona because we don't know who we are in retirement. So the mindset here is, who am I in retirement? So what am I retiring to? Because this is what will enable us find purpose in our retirement life. And because you have sort of lived a structured life, right? It may not be a good idea to completely, throw that out of the window. I would advise that you retain some structure to your day. So an exercise I would normally do with my clients is to say, write your perfect retirement work day. From when you wake up to when you go to bed, what would you be doing? And it's usually an aha moment for a lot of people, because once you remove work away from their day, they struggle, to find what else they'll be doing. So that is a very critical exercise, because it then helps you understand what your day is going to be like. Of course, estimate your resources so that you can know what you would have in retirement. But I know we're going to speak to the financial side, of our retirement, because preparing the retirement budget is really, really important for your psychology. Why? It helps you know whether you are in a comfortable place psychologically, or financially, so that psychologically now you feel good. There's no anxiety, right? If you are owing, for example, it's a good idea to downsize your debts, because you hopefully you are not planning to use your retirement funds to, offset your debts. And anticipate that medical care costs will likely be higher in older age. So be prepared. Because if you are not, and your employer has been given that cover to you, and you come into retirement where that cover is off and you haven't done anything about it, there will be anxiety. Each time you have a health issue, the fear of going to the hospital, how much is it going to cost? Wow, I don't know, and all that. So God forbid that we then mismanage our health. So anticipate that healthcare would be a major thing in retirement. Plan where you would live. Because if most of your life you have lived in a certain place or lived a certain lifestyle because you had the finances to handle it, or perhaps you wanted to live near your office, so you're ready to stretch yourself financially to live in some place, maybe this is the time to step away from the so-called maybe highbrow areas or the huge mansion you had built to ensure that all your children have their own rooms. You don't want them to go through what you went through. But many of us, when we come into retirement, we are empty nesters. So that means that the children have left home, right? So do you still need that huge house, right? And this is the time to, start having the conversation with your family, right? Prepare them for retirement, especially your spouse. And I would recommend that you have that conversation over a period of time. What you're trying to do is align your goals, both of you. What would you like to be doing in retirement? What would I like to be doing? Are there areas of alignment? Okay, hey, I want to travel as much as I can. Oh, right, I too. Okay, so it's something we'll be doing together. And even the idea of downsizing your home is a conversation you should have with your spouse, because both it's a psychological thing, moving from a big house to a smaller one. If you ask me, I could tell you stories about my experience. It's a huge culture shock. And I'm still struggling with it psychologically, because we had to relocate into a smaller apartment. But what you're also trying to address is the fact that in your older age, you're not worrying about the generator. You're not worrying about or somebody going to buy diesel, buy fuel, electric. They paid NEPA bill, that those sorts of things. So in older age, you need those conveniences, right? And another thing I always stress is embrace technology and the digital. Some of us, uniquely go through life assuming that we would always have people do things for us. But you know what? This is what technology and the digital have come to help us with. Because as we age, you find that, if you have retired from corporate life at a senior level, for example, somebody always booked your flights. You don't even know how it was done. Somebody claimed your miles, and all that. So, but do you know how to do those things yourself? So because embracing technology and digital affect your travel experiences, your medical, because you now have virtual consultations, and you don't physically have to go to your hospital unless the medical person down tells you to come. Even for your health and fitness, you join a gym, join an aerobics class online. All those things help to put you in a very strong psychological space. What about shopping? Do you have the energy to be going out shopping? Perhaps you want to order things in, but your ability to embrace technology and the digital really help out with this. Connecting with other people. Because again, older age is really, really, I mean, I say that it can be very lonely. Remember that we said that research has shown that we lose 70% of our contacts. How do we make up for those? Because before you retire is the time to embrace other connections that you should actually have in your life, your old students association, get busy with your, residents association, have some core, group of friends that you can connect with so that when you lose colleagues, you have some other people to take care of that. And sometimes virtual connections are just as good. So you have to be very tech savvy to know how to set up a Zoom meeting, Google Meet, etc. And it is good for your self-development because you can join webinars online. It feeds into your mind and helps because activating the mind is really important as we age. And it's such people don't even want to hear that word age, but that is what happens as we progress in life. So those things are important. Another thing I would advise for good psychologists, cultivate relationships that fuel your passion. I personally, I have a hub of younger people in my space. And the reason for that is excellent reverse mentoring, one, and just having very lively conversations. The world belongs to the younger people, and I am now coming into their world. So I need to know what is happening there. So it keeps me young, it keeps me abreast of, happenings in the world, keeps me abreast of technology. What are people doing now? How is marketing being done? How is, what's happening on social media? I choose to be very active there because those are interactions that are very precious. And above all, make sure you maintain a very positive outlook, because as you come into this space, there is a lot, that can happen that would significantly transform your life into a much better lifestyle, if I may say so. I'm having one of the best times of my life in retirement than I did when I was working, if I may say so myself. Thank you, Rebecca.
Thank you very, very much, Inyang. That was, super, super exciting and very insightful. We all sometimes focus on only the financial aspect of retirement. And, oh, I just want to have enough money. But then when you get post-retirement, you realize, oh, probably don't even have people around me anymore as much. So understanding this psychological preparations is really, really helpful. Thank you so much for throwing more light on that. Now, as we just spoke on financial, we're going to be able to explore the financial preparations now also required for retirement. So we're going to go to Adetola, who is, our financial expert and MD CEO of United Capital Wealth Management. Now, Adetola, as a financial expert, what are some, fundamental steps that you'd advise individuals to take in financial planning for retirement?
Excellent question. Thank you once again, Rebecca. I'm happy that Inyang has laid the foundation, starting from a psychological note. I would now talk about financials. Financial planning, as most of you are aware, is the cornerstone of a secure retirement. I would advise you, don't leave your retirement up to chance. You can take control of your retirement and find out if you have the funds to retire comfortably and what you can do to change your financial situation if you take the necessary steps. Retirement planning has several steps with the end goal of having enough money to quit working and do whatever you want. Our aim in United Capital Wealth Management with our retirement planning guide is to help you to achieve that goal. The first step is for you to know when to start retirement planning. When you should start retirement planning is actually up to you. But the earlier you start planning, the more time your money has to grow. That said, it's never too late to start retirement planning. So don't feel like you've missed the boat if you haven't started. Even if you haven't so much as considered retirement, every naira, every foreign currency you can save now will be much more appreciated later. Strategically investing could mean you won't be playing catch up for long. I want you to take note of that. The next step is for you to figure out how much money you need to retire. The amount of money you need to retire is a function of your current income and expenses, and how you think those expenses will change in retirement and how they won't. We usually suggest that you set a retirement budget because you will probably still want to take vacations, go out to dinner, and you may still have car or home maintenance costs to deal with. The typical advice is to retain between 70 to 90% of your annual pre-retirement income through investments. For example, a retiree who earns an average of 50 million per year before retirement should expect to need between 35 million to 45 million per year in retirement. Now, after calculating how much you would need, you then need to prioritize your financial goals, considering your desired lifestyle. Retirement is probably not your only savings goal. Lots of people have financial goals they feel are more pressing, such as paying down on loans or building up an emergency fund. It's a good rule of thumb to save for retirement while you are building your emergency fund. The next step is to choose the best retirement success plan for you. We tag this RSP in United Capital Wealth Management. This is where you can subscribe to our Retirement Success Plan, RSP, in United Capital Wealth Management. The RSP is a structured process that results in a final retirement plan that is customized to your needs and concern. Step one of the RSP is what we call the allocation. This is very critical. It's a very critical step because after we've learned who you are, how you determine retirement success, what your goals are, we make a recommendation of how you should spread your money across different asset classes. The framework that we use to build your allocation is what we call the core four. We have the peace of mind pillar. We have multiple streams of income pillar. We have the growth pillar. And then we have defense or alternative pillar. Some of our clients have their money spread across all the core four. It makes sense to have just 2 or 3 of the core four that we use based on your goals and your circumstances to build up your allocation for your retirement. Step 2 of the RSP is the income planning process. So we want to see multiple streams of income in retirement. We like to leave off interest as much as possible while keying into those principles. While step 3 of the RSP is tax planning. Step 4 is healthcare planning. Inyang alluded to this while she was having her presentation. Step 5 is estate planning. My colleague Michael will take a deep dive into the nuances around estate planning. And then lastly, select your retirement investments such that they align with your goals. It's important to debunk the fallacy that a pension or retirement savings account alone is sufficient for retirement. Inflation can erode the value of your savings, making it crucial to invest wisely to ensure financial security. Retirement accounts provide access to a range of investments, including stocks that we're all familiar with, bonds, and mutual funds. Determining the right mix of investments depends on how long you have until you need the money and how comfortable you are with risk. Generally, the idea is to invest aggressively when you are young and then slowly dial back to a more conservative mix of investments as you approach retirement age. That's because early on, you have a lot of time for your money to weather market fluctuations. Probably a few bad years won't ruin you, and your nest egg should benefit greatly from the stock market's history of long-term growth. Thank you.
Thank you very much, Adetola. Very great advice that Adetola has given us today. I mean, I was able to pick on understanding, risk and some things about stocks, bonds, assets. So from what Adetola has said, I just would like to ask a follow-up question. So what type of investments would you advise individuals to consider to, ensure that they secure a good retirement? And how can individuals also manage their financial risk as they approach retirement?
Thank you very much once again, Rebecca. Investments is a critical aspect of planning for retirement. Diversification is key. If you consider a mix of stocks, bonds, and real estate, you'll be able to spread your risk effectively. Stocks, for instance, it offers growth potential, while bonds provide stability. Managing financial risk involves regularly reviewing and adjusting your investment portfolio. It shouldn't be static. It's also wise to minimize debt and avoid high-risk investments as you near retirement. At United Capital Wealth Management, we offer personalized retirement planning services that tailor your investments to your retirement objectives. There are many investment options available, but it is crucial to choose options that are suitable to meet up with your financial goals. You can consider investments in fixed deposits, government bonds, mutual funds, real estate, and annuities. Beyond the shores of our country, you can also consider gaining exposure to offshore markets and diversify your investments across geographical regions, across various currencies and asset classes, depending on your objective. We have investment solutions that caters to such varying needs. The beauty of our offering in United Capital Wealth Management is that you can invest in a wide array of global trading currencies, ranging from US dollars, pound sterling, euros, Swiss francs, Canadian dollars, Australian dollars, and so on and so forth. Furthermore, you can also broaden the scope of your investment basket with inclusion of foreign securities with the likes of NVIDIA, Apple, Microsoft, Tesla, Google, Meta, and many more. Now, I will quickly delve into the risk area. It's one thing to invest, it's another thing to ensure that associated risks are adequately well catered for. On how to effectively manage risk, it is crucial to carefully consider the risks and benefits of each investment option you key into, and to also seek professional advice before making a decision. By making informed investment choices, investors can ensure a secure and financially stable retirement. Effective retirement risk management requires addressing longevity risk. I'm sure nobody can actually ascertain when he or she would transit from this world. So this is a risk that we need to take into consideration. Also, market downturns. Nobody equally has a crystal ball to determine market swings. Inflation, of course, the monster in the room, and health crisis. All this are risks that we need to cater for. By diversifying your income sources, maintaining strict withdrawal strategies, and investing in inflation-resistant assets. As you approach retirement, it's essential to manage financial risk to safeguard your investments. There are 3 key risks that you need to consider, and I'll quickly run you through strategies to mitigate them. The first one is market risk. This risk stems from stock market or some other asset fluctuations that could impact the value of your portfolio. You can mitigate this by gradually shifting your stocks to bonds and cash as retirement nears. You should therefore consider diversifying your investments to balance growth and, of course, stability. The next is inflation risk. Rising prices erode your purchasing power over time. I'm sure you would agree with me. This is basically what inflation is all about. One clear way of mitigating this is by investing in assets that rise with inflation, like stocks. You can also consider treasury inflation-protected securities. Finally, you need to consider longevity risk. People are living longer nowadays, increasing the chances of outliving your savings. A clear way of mitigating against this risk is by using a 3-bucket strategy. The first one, allocate for immediate needs, not only for needs during retirement. Also consider long-term income. And lastly, growth consideration for your investments is very, very critical. You need to take all this risk into consideration if you want to retire ready. Thank you.
Okay. Thank you very much, Adetola. That was, again, very insightful. So, I mean, we've had Inyang speak on, the psychological aspect of retirement planning. We've had Adetola speak to us on the financial aspect of retirement planning. And I want to believe that we've all really gained, something from this. Some of the things I have really noted is really understanding your lifestyle goals and how they pertain to your retirement. It's obviously very obvious now that the psychological part and the financial part must work hand in hand, because if you have all of these goals you want to achieve, the money has to be there as well. I would just like to remind our listeners, for those listening to us on Zoom, please do not forget to use the Q&A section. We can see your questions coming in. And for those on YouTube, please don't forget to drop your questions in the comment section. Right, so now we're going to be going into something, also very insightful and exciting, estate planning. Michael is going to be taking us on estate planning. And while it's important to state your goals, understand your finances, when you gather all of your assets, how are you preserving and protecting them? Our MD CEO of United Capital Trustee is going to shed more light on this. So my question to Michael is, why is estate planning an important aspect of retirement planning? What, are some key components of an effective estate plan?
All right, Rebecca, thank you for that question. Comment Adetola as well for taking us into a deep insight, as well as Inyang. Thank you for preparing us mentally. A big congratulations if you are already thinking of retirement. This is a very commendable thing. in the whole retirement planning, why should estate planning be a very key important thing to consider? And estate planning generally is a critical process that enables an individual to manage and preserve their assets and ensuring that their express wish is being carried out. So this is the preservation bit of it. You are growing all of this. You spent a lot of years accumulating different classes of assets, and you want to ensure that the preservation, and when the time comes, the transfer of those assets are done in accordance to your express wishes. And so what makes this very important is that, number one, your asset is protected. When you have an estate plan, it ensures that your asset is being protected, is identified, the quantum, the different class of it are there in your name. They are properly your own assets, not assets that are not properly transferred to you. And then your estate planning also enables you to identify who your beneficiaries are. Oftentimes we get documents where people feel next of kin, they feel all kind of things. Your next of kin is not your beneficiary. So your estate plans helps you to identify clearly who your beneficiaries are, not forgetting that under an estate plan, you are the number one beneficiary. Your children, your dependents, your guardians are also beneficiaries to consider under that. Number two thing is also for tax efficiency. Now, a lot of people are not aware that the need to transfer assets, whether during your lifetime or upon demise, comes with a huge estate tax. And so what happens generally is that estate plan helps you to minimize the tax burden that comes from transferring your assets when the time comes or when the need arises. It also helps you to have a lot of financial control over your assets. Now, this is the time where you want to sit back, you want to live your life, you want less burden, and you want some level of transparency and accountability. What the estate plan does is what you call the organize in a way that preserves it so that you have control. You give instruction. This is how I want this to go, and this is how I want it to be regularly. I want this report quarterly. I want this monthly. All of those things go a long way in helping the dynamics of your retirement to be well secured. There are also the beneficiary designates. Now, we've said this, that under the RSA, no one can access funds in a bank in the event of a demise. No one can transfer what they have in their RSA. No one can move a life insurance to another person. Your estate plans helps you to identify clearly who are the beneficiaries to the different things that you have, your stock, your RSA balance, what you have, whether you have a policy or you have some life insurance somewhere, who exactly are the benefits. Now, some people are even entrepreneurs and they are saying, look, I have worked this hard from a very young age. This is a business that we've had over the years in the family. My wife and I started this business. Now we're getting into business. What is the business succession plan? Your estate plans helps you to identify this. Ownership is not management. And the ability to say, look, there are certain businesses we want to keep in the business, right? There's a trust fund for the family. Everyone who is a member of this family or who is named under this estate plan can benefit from it, but they cannot transfer the ownership of the business to another person. Those are things that you need to sit down and ask yourself. What are the things we have interest in? Do you have controlling shares in a particular thing? Do you have some other things you want to avoid? Those are things you can identify under the estate plan, and we're happy to do all of that. Now, there's also the part where for healthcare considerations. Now, one of the things we do is to consider things like power of attorney. At this time, we see that people are at different times of their age, and retirement is oftentimes some of your strongest or your most youthful days has been spent, right? And so health is also something that is paramount you need to think about. I want to do a power of attorney for who takes a financial decision on my behalf, or who takes a health decision on my behalf in the event I am incapacitated or I cannot take that decision. When you are doing your retirement plan, those are key estate planning components which you must think about. And what are some of these components generally? A testamentary will is an estate plan tool or a vehicle that helps you to do that. A lot of people are aware of this, but statistics has also shown that even among the educated and literate, a lot of people do not have any form of estate planning. We are more than happy to help you include this into your retirement plan. A testamentary will ensures that all of your assets are identified, your beneficiaries are identified, and in the event of a demise, you're not wondering where this is going to. You also avoid the trouble that comes with probate. When they say someone died intestate, it means the person died without any estate plan. So you are open to the discretion of the court, to the laws of the land. There's probate. It's a long and a costly process. You do go to the probate division of a court, you file for this, surprise, different beneficiary will come up and say, oh, that dad was also my dad as well. You have to wait until every possible beneficiary is being identified. My experience over the years has shown that this could take 1 year, 2 years, and surprisingly, even as much as 10 years. Avoid this and have an estate plan. Another component of estate plan is a trust. Trust is an estate plan that enables you to manage your asset whilst you are alive, right? And it has the benefit that it helps to significantly minimize estate's cost, and it enables people to have, you can have a settlor directed trust, you can have a living trust, you can have a trust that is actually geared towards some other things. You can have a trust that is geared towards some charitable giving. This is a time when you want to look back and have some legacy. So whether it's a foundation or an endowment, all of this thing makes it possible. And of course, the power of attorney, which we mentioned earlier on, that enables you to identify who makes decision for you in the case that you are incapacitated. I hope this provides some insight as to why you need an estate plan.
Just perfect. Very wonderful. Thank you so much, Michael. And I believe from what you have just explained to us, just too knowledgeable to not to point out the fact that estate planning as we know it is way beyond a simple will that we all thought it was. It really goes beyond that. And I remember you mentioned, talking about persons, your money in the bank can't even be accessed except by your beneficiaries. And if Michael will permit me, I just wanted to add from my little knowledge, I know is that I'm sure most of us here think, what of my next of kin? It's important to know that your next of kin is actually not your beneficiary. So having a proper estate plan would allow your proper beneficiaries have access to your assets. When we talk of estate planning, persons wonder, when do I start? What do I do? So to Michael again, would like to discuss on the timing of estate planning. When would you advise individuals to start estate planning, and how often should they review and update their plans?
Right. Thank you, Rebecca. Yesterday was the best time. Today is the second best time. Tomorrow is beautiful, but it is not guaranteed. Get up now and do your estate plan. If you're an adult, you're 18 years and above, have one. A lot of people say, oh, I don't have anything. The Pension Reform Act of 2014 state that no one can assess any balance in your RSA except through a will or a letter of probate. And that means that anyone who, for some sudden reason, they are left in a demise state, your dependents, your spouse, your children, everyone depending on you cannot access anything you have, even if they know where it is, except they have to go through all the whole rigor of the letter of administration, which is a very long process. The simple process to giving a will can be done now. So the best time to do it is now. Tomorrow is not guaranteed. We encourage everybody, if you don't have one, please have one now. How often can you review this? Estate plan is not as complicated as people think it is. It is a very simple process. You can review as many times as possible. If you have a will, you can make an amendment up to 100 different times. Why is that so? Because your asset evolves. You're acquiring more assets, your asset has increased, and sometimes you dispose of an asset to acquire another asset. All of this amendment can be done as frequent as possible. Don't be a city without a wall. Take time to plan your estate, and we're here to listen to you. Thank you.
Thank you very much, Michael. Very apt. Thank you so much. And from everything, I definitely want to have a legacy for my own family and children and desired beneficiaries. I believe we all on the call want to be able to have so. And it's so interesting to see how, everything we've talked about really marries each other, from understanding the psychological part of retirement planning to actually having your financial plan in place to cater to your goals, your aspirations, your desired lifestyle. We all want to be able to live a good quality of life when we're no longer in our active work years. And then the estate planning part is just the icing on the cake, having that ability to actually rest in your retirement, knowing that your assets are well preserved and will be transferred, in case anything ever happens. So thank you very much, Michael, for touching on the aspect of, the businesses and being able to actually have the proper plan for that aspect. So we'll be going back to Inyang now as our retirement planning queen and expert in this field. Could you help us elaborate on how entrepreneurs and business owners can effectively approach succession planning when preparing for retirement?
Thank you, Rebecca. Oh, excellent job, Michael. I mean, I really, really enjoyed that. So, I know many of us business owners and entrepreneurs, this whole concept or notion of retirement is not quite something some of us have embraced. Why? Because we are in the business that we set up, we are living our dream, we are living our passion, but a time will come when you do need to step outside the business, right? And it's important that your legacy continues. So succession plan is essential, right, to ensuring that your business or whether it's a personal project, that it continues smoothly after you retire. Sometimes for some of us, it is age that compels us to retire from our businesses, sometimes health, and we hope that won't be, the portion of any one of us here, but it's important to strive to minimize the negative effects that your exit will have on your company. So what do you do? So identify the most qualified candidates, that you see can take your company beyond you, and start coaching and pouring into them. And be sure to have a few so that if anyone leaves, you are not starting afresh. And let me say it here, it does not have to be your children. Yes, we all want our children to inherit our businesses. After all, what did I set this up for? If not for them, they are part of my legacy. But what I've found is that sometimes our children don't have the passion for the kind of businesses we are running. Sometimes they just also even want to express themselves. I mean, I've spoken to clients who are in the educational sector, and they tell me that their children are not interested in taking over their schools. Guess what? Millennials and Gen Z don't find running a school sexy, and that is the word they use. They say it's not sexy. It's a lot of labor. So some of them are not interested. So what do you then do? Within the organization, look for candidates, people that you've identified possess the qualities and skills that you see in the future of your company, and start building them up. Like I said, have a pool of them. But worst case scenario, one, you want to transfer the business, like I said, to a family member, but sometimes that doesn't work. You want to also be able to sell the company to an employee or a key partner in the event that you can't do any succession planning, or you have to sell to an complete outsider, right? Another exit option, and the one least preferred, is closing and liquidating your company, right? But these are all business exit options. And so long as you plan to have this in place, make sure that your business has the right structure for somebody else to step in and just operate. So the way you run the business, the way you've set it up, your processes, your financials, run it like you are running a Fortune 500 company in the making, right? And perhaps if you do that as well, your children may be interested in taking over that type of company. I think sometimes the struggle here is just maybe slipshod way we are doing it, because for some of us, it's more about the passion than the business. But if you're running a business, whether it's out of passion or not, you have to run it profitably for it to make sense, right? So the idea is to preserve your legacy, ensure continuity. And so your succession plan, like Michael said, can be integrated, into your estate plan so that it is now something that, you are doing for posterity, so to speak. Thank you.
Thank you so much, Inyang, for that insightful answer. I believe that has really captured, what we really need to understand on the topic today. We really had a good run. I mean, this has been an amazing conversation so far. I have definitely learned a lot, and I'm very sure our listeners have also learned a lot from, the session today. To be honest, I'm very excited with the questions that we have. We might not be able to take all of them, but we'll definitely be able to touch on a key ones. And since some of them are similar, we would take persons' questions together. So please, I'm going to be starting with although please keep the questions coming. We're not complaining. Keep them coming. We're very happy to answer them. So now I'm going to start with the first question. And this question is from an anonymous attendee. And this question is for Adetola. The question goes, does UCAP have products that can assist their clients in this, talking about saving in foreign currency? Does UCAP have products that can assist the clients in this regard? Please, Adetola.
All right. Thank you so much, Rebecca. And to Anonymous, thank you for your question. Of course, we have products and services that are foreign currency denominated. I mentioned earlier on that we can actually facilitate the purchase of offshore securities. Our offerings are not limited to our domestic market. As a matter of fact, our mantra is local presence, global expertise. I think I saw a question just now. I can just take the two together. Talking about purchasing offshore securities, for instance, we provide the necessary platform that would assist our clients in purchasing different kinds of assets, ranging from offshore mutual funds to stocks, to bonds, whether sovereign bonds or government bonds. We can assist to purchase these various assets. And then one thing that is unique about our offering in this regard is that, one, you can invest across various currencies. So by so doing, you can effectively hedge against currency risk. Then secondly, for most platforms that you have within the country, they are restricted only to the US markets. The beauty of our offering in United Capital Wealth Management is such that you can trade across different jurisdictions, whether you want to access securities in China, whether you want in any of the Asian countries, whether you want in UK, in Canada, or in US, we have what it takes to be able to facilitate the process. Thank you.
Thank you very much, Adetola, for your answer. I believe that has really, answered the question. So our next question, so we have this question in different similar ways. So I'm going to be taking the question from right. Okay. So from one of our Zoom listeners, from Matthew Abaton, I hope I pronounced that correctly. He's asked, is a will the same as estate planning? Because Michael seems to use them interchangeably. Who administers estate planning? We also have a similar question in that regard from YouTube. And this question is from Solomon Tunde Ojo, who says, please compare will and trust. What are the advantages of one over the other? Over to you, Michael.
All right, thank you so much. A will is a subset of an estate plan, right? So an estate plan is the main header for what you're trying to do towards preserving your asset. So whether you are going through the vehicle of using a will or a trust or a power of attorney, or you're looking at some settlor-directed trust or some non-discretionary trust, they are all vehicles that will help you achieve estate planning. So they are all subsets. A will is a subset of estate plan. I hope that answers the question. I don't know if the second question is from me.
Thank you, Michael, for the answer. So the second question was actually just almost in line with the first question, which I believe you've done justice to. Thank you. So next we have another question from an anonymous attendee, and this question is for Inyang. It says, I have a thriving business in Nigeria. I want to know more about succession planning. How far in advance should I start planning for the transition, and what legal or financial steps should I take?
Well, first, there are no financial steps to succession planning, not quite like that. And succession planning should start from the time you start the business, because you should always work with the mindset that you will not always be here, right? So that should inform the type of recruitment you make too, because they should be people that you see can sit comfortably in the future of your business. So you are grooming them as you go along. And in not too far a time, you would actually see the brightest and best amongst them. And you then have identified them. And with time, when you have decided when you are going to step out of the business, I think it would be a good thing to, bring them in, have a conversation with them, let them know the plans you have for them, and also hear from them if they are interested. And if they are, it makes it a lot easier for you then to start coaching and pouring even more into them and really delegating a lot more to them and letting them know, that they are in the future of your business and they are the next, generation. And with that, I know that by the time you're stepping out, your choice should be clear. But one thing we should watch out for is rivalry, between people that see themselves as the next in line. And a lot of human management has to take place there, because even for you, it has to be clear to you who is ahead of the other. And it should be so clearly stated within the organization so that it's not in doubt, when you step away. Thank you.
Thank you very much, Inyang. I mean, what I picked from that is the best time is now. So once you have a business, you start immediately. And that really covers everything we're talking about today. Everything that has to do with financial retirement planning, you start now. So we have two questions that are similar from YouTube. We have from Taiwo Awonaya. The question says, with the downward spiral the Naira has demonstrated in recent times, is it still advisable to invest in Naira or just keep your money in dollar investments? And the similar question from Michelle from YouTube is, in a country like Nigeria, where inflation is at a record level of 34%, what specific financial products or investment options are best suited to hedge against inflation in Nigeria context? So I'm going to be directing that question to Adetola, who would help us shed light on this. Thank you.
All right, thank you once again. Okay, I think the first question has to do with whether it is appropriate to invest in Naira or in foreign currency. And my answer to that is, it all depends on your objectives. It depends on your goals. You understand? And it also depends on your cash flow needs. If you feel that because Naira is on a downward slide, you should go and convert all your Naira to dollars. What if within the next couple of months, we witness, a turnaround? So like I said, what is critical is your cash flow needs. If you would need to make payments, I mean, if you have obligations, a few months down the line, that is Naira denominated, it is in your interest to keep Naira investments. However, if you have foreign currency denominated obligations, then it makes sense for you to invest in such currencies. Then I would then take the second one about hedging against inflation. The truth is, we do not have control over inflation. You are very correct. Inflation may have an adverse impact on our various investments. This is why diversification is very, very important. We've talked a lot about diversification today. You may allow professionals, this is where you can allow professionals to actually handhold through this process. There are various products that you can invest in that will enable you to hedge effectively against inflation. And you can, like I said, there are various. Okay, take for instance, you will recall that sometime around this time last year, interest rates on treasury bills were relatively at it was relatively at its lowest ebb. However, as the MPR rate is being increased, you would notice significant increase also in treasury bills. Treasury bills are government instruments and they are tagged risk-free. So you can consider investing in such instruments, you know, to effectively hedge against inflation. Thank you.
Okay, thank you very, very much, Adetola. I think the important thing to know there is, first of all, understand yourself, understand your goals, and then you're able to really select what works best for you. Right, so I have a question here for, I believe this would go to Michael. It's from an anonymous attendee, and it says, I have an existing estate plan with another firm, but I'm very intrigued by your financial services. Is there a way these two can work together? Can my assets in another firm be in my estate plan with United Capital?
Okay, so thank you for that question. I will assume that the asset is under some sort of investment instrument, and if they are not under an estate plan, we're happy to discuss, the details around that. Again, the nature of what is being done, if it's a proper estate you already have, we want to identify what the issues are. There are perhaps things that you can walk through and not necessarily things that you want to transfer. However, if they are just basically investment, your investment could be anywhere around the world. It could be in JP Morgan, it could be with Datola's wealth management, it could be anywhere, but you can still have it under an estate plan. And I see a lot of questions as well in the comment sessions. I know we can't take all the questions today. Someone is even asking, do you have an office in Port Harcourt? The answer is a yes, we have an office in Port Harcourt. I'm sure Rebecca will be able to leave a contact details. You can never exhaust the discussion around estate planning, and there are no one size fits all. Everyone has a peculiar estate plan to themselves. And so we're happy to take as many questions post this webinar. Thank you. Thank you.
Thank you very much, Michael. I'm going to take maybe just one or two more questions. And this question is for Inyang, and it's from Oyi. It says, what are common mistakes people make when planning for retirement? So as our retirement planning queen, I'm sure you can give us a lot of insights on that.
Well, thank you. Number one for me is underestimating your longevity. Because some people feel, oh, in my family, we don't live up to 80, or because I have this disease, I'm not likely make it beyond 70. And then God surprises you and you live till 90. So which means that in your mind, you were planning for an exit from this world that says 60, 70 and all. Because it happens when I speak with clients and I say, just a little exercise. Tell me, if God gave you the option to say how much longer you are going to live in this world, tell me when you want to exit. And it's always such a, giggly situation where people say, well, if it gives me till 80, I'm fine. A lot of people, 90, 95. I say, okay, good. So if you're retiring at 60 and God gives you till 1995, it means that you have 30 solid years. to plan for. I mean, if you've lived 60, so now that's 1/3 of your life. So could you possibly be approaching it without any plan? 1/3 of your life. So some people have this thing that where they underestimate in how long they live. And so that already caps, their financial plans, their expectations for retirement and all that. Number two is ignoring inflation. Because inflation is real. And all you have to do is speak with existing retirees. I mean, their agitations are very heart-wrenching for me because, just as, here we're talking about people having a good, solid retirement budget and all that. Okay, so they budgeted, right? But inflation has done them a number. So now they find that they can't fuel their cars from what they had anticipated as their budget. They can't pay for their medications from the budget that they had set up. They can't, pay for electricity. All of a sudden, you are talking plan A, plan, or what is it called? Is it plan A, we'll call it, whatever it is. So what do they do, right? So you have to acknowledge the inflation in your budget and make sure that you are making, as best as you can, adequate provision for the inflation. And another thing is not modifying your lifestyle. I think that's a mistake some people make. I mean, I have gentlemen that I speak with sometimes, and they say, you know what? I mean, this thing I do when I close from work, I go to the lounge, hang out with my friends. I mean, but you're spending money. And now you want to continue doing that with your retirement funds. I think that's a huge mistake. And one of the ones I always say, and people feel, oh, really, but childbearing in older age is a huge mistake in retirement. If you can avoid it, you should not be bearing children in your older age. I mean, I know there are situations where, God did not answer you early, but a situation where you are saying that you took on a second wife, because, your first wife was off and, going for a mugo. Yeah, Nigerian retirees tell me that they married a second wife because their first wife was busy with a mugo. Okay, so Daddy, how do you plan to be paying school fees from your retirement? So I think these are very, they're huge mistakes we make, and they bungle and, just throw out of whack the plans that we have put in place for our retirement. Thank you.
Thank you very much, Ian, for giving us the opportunity to learn from you. Thank you for your answer. So we're taking our last question now. And to be fair, we have quite a number of questions that we're not able to take on the call. We have questions regarding our, return on investment, estate planning, the wills. I think everybody is tilting towards the will side and even understanding the assets that are available. But then I would be dropping our email that you can send an email for persons to really answer your questions, even on a more personal level. So if you have your questions that are not answered here, please send an email to wealthmanagement@unitedcapitalplcgroup.com. The wealth advisor will definitely attend to you. So my last question is for Adetola. And the question here says, can I have a retirement plan with my spouse? We currently have a joint savings account, but we do not invest together. How do we go about this?
All right, thank you once again, Rebecca. Yes. Okay, the question is, can the caller have a retirement investment account with the spouse? Definitely yes. That is what is even advised. Because collectively you can, have a holistic view of where you intend to be, plan together. So it is advisable for you to carry your spouse along when you are investing. As a matter of fact, when we're conducting the discovery exercise to get to understand and know you, what can be tagged as profiling, it is encouraged that you come along with your spouse. By so doing, we'll be able to profile the wife, profile the husband, and also determine your risk appetite. You know, one party might be risk averse, the other party might be a risk taker. So we take all these things into consideration and ensure a balance. And then we also look, you know, take you into the future. How do you envisage your retirement to look like? So all these things will be taken into consideration. So you are encouraged to carry your spouse along. Thank you.
Thank you very much, Aditola, for your answers. So I believe for our, partners on the call, Aditola has been able to answer that question. So please take a partner along with you. It's very important that you have decisions made together. So just as Michael had mentioned, touching on our locations and the questions that were also raised on them, I would like to point out that we are very much present in most geographical locations in Nigeria, from Lagos to Ibadan to Port Harcourt, Abuja, Onitsha, Warri, Kano, Kaduna, Gombe. And we are a Pan-African company, so we have our presence in other parts of Africa as well, like Ghana and Cote d'Ivoire. So just again, if we're not able to take your questions, please note that you can send them to wealthmanagement@unitedcapitalplcgroup.com. And we will definitely be very much happy to respond, to your questions. I mean, again, today has just been very wonderful. The knowledge we have gotten is so powerful. I think planning for your retirement and understanding everything that has to do with financial planning, succession planning, estate planning, really being able to cater to all of these things is very important, especially in this time that we're in now. And what we've been able to say that the best time to start is now. You're not too late, you're not too early to start having all of these plans in place. I mean, with all of these insights, we really hope that you feel more equipped to plan for a very secure and fulfilling retirement. And United Capital Wealth Management and United Capital Trustee, the entire United Capital Group is here for you to really, go on this journey with you. We would like to say a very special thank you to our guest speaker, Inyang Samuel Rube. Thank you so much for being here and for lending your voice to, our webinar today. I'm sure we've all really learned from you today. And just to note to our audience as well, please, we're going to be having many more exciting and insightful sessions like this coming up, and you'll definitely be invited to join. Just for persons who would like to have a recap of the session as well, this recording is going to be made available, and we'll also be sending you emails to, thank you for joining and having links that you could reach us to as well. Again, a very big thank you to everyone who has stayed with us till this time. We're very much grateful for your time here. Thank you to Michael. Thank you to Adetola for being present. We do not take your presence for granted, and thank you to our audience as well. Without any more, notice for us, I'd like to bring this session to a close. We hope to have you at United Capital. We are the intelligent choice for you. Thank you and have a good day, everyone.